All right. Good morning and then welcome to yet another training section. We have been looking at trend from for some time now. We looked at the downtrend. We did a few things on the uptrend. We pointed some important rules for a trend, either up or down. Now, there is a concept we will talk about today, which involves trend reversal. We'll look at trend reversals, what can obstruct a trend or what can reverse a trend. There are setups in the market that has high probability ratio or power of reversing a trend. And today we'll run through the live chart. This is a live chart dated this is Euro JPY pair dated that's 24th July 2023. So we will do a live chart, a live should I call it process of major chart price reversals. Now, the first price reversal I want to talk about is what we call reversal patterns. Reversal patterns has high probability rate of reversing any 1 minute. Reversing any trend at all. Reversal patterns has a really, really high ratio of reversing any pattern. And I would do this with the chart from here, so we can get it real clear and know what we're doing. I'll use this. I believe you can see this chart. No. What's this? Okay. Yeah. So I want to build in you. Okay. So chart patterns are powerful reversal or carries powerful reversal in a trend, affecting any trend. Whether the trend is on the up move or on the down move. Chart patterns, forex chart patterns has 80% potential powers of reversing a trend. But I will talk about just the reversal patterns alone, since we're looking at reversals today. The first reversal pattern I want to talk about is called the inverse head and shoulders. We'll go to the chart and look for it and talk about and explain them. I point them on the chart and look at them. This particular chart pattern, my cursor is on, it is called inverse head and shoulders, and is a very high momentum reversal pattern in the forex market or in the market at large. How do you identify these patterns? Now, this is an obvious downtrend. This trend is an obvious downtrend. Remember from the rule we stated, for a downtrend, we must record areas or levels in forms like this. That's a lower low and a lower high. A lower low and a lower high. Therefore, this was a lower low. This was a lower high. This was a lower low. This was a lower high. A lower high bridging between the previous lower low, lower high, and the current. Now, identifying these chart patterns, they are easy to identify by their name. What you do is this, you write the name down somewhere. It's called inverse head and shoulders. That is, this pattern should have a head. In its formation, remember, is dropping from here. In its formation, is dropping from here. It recorded a high, lower low, lower high. It dropped. This is a good downtrend format. This is a good downtrend format you want to know. Now, a lower low, a lower high, a lower low, a lower high. Now, the lower high should not, remember that in a downtrend rule, the high should not go at the same length or above the previous. So if this should have recorded a normal trend low, it should be here, lower low, lower high, lower low. Lower high should be around here. Should be around there, and it drops. Remember that this zone, this is a low, this is a low, this is a high, this is a low. This particular low should not be above this low. This low now should be probably around this place. I'll use I'll go back to the chart and let me explain what I mean by that. Let me put out another chart. Let me explain what I mean by that. Now we're saying this. An inverse head and shoulder is just identifying it is let's say it's on a downtrend. All right, this is a low, this is a high, this is a low, which is okay. Right now, this other low, for it to be accurate, it shouldn't go above this other low. It shouldn't go above this other height. So probably it should stop areas around. It should stop areas around here at most, here, and another drop. But look at what happened. It continued to areas around here, and then here, and then tush. Now, identifying a head and shoulder, it simply gives you a head, that is, the trend pops down, records a low, a high, then you find out that the shoulder, just like a human shoulder, that's just what happens there. Just like a human shoulder, the shoulder is at the same length, at the same height. So a rule broke up here that actually affected this formation. If this formation didn't break above this level to record another low around this age, then it won't become a reversal pattern. Wherever this reversal pattern appears or forms in a downtrend, then mind you and know it very well that there will be a huge reversal, a huge turn up, a huge reversal in that trade. It happens more than it doesn't. So here you say one shoot, it came down, came down, and then that it broke. All of this now is area it has broken and created another trend for itself, from a downtrend to an uptrend. The next of it is head and shoulder reversal bearish. Now this one only happens on a bullish trend. The inverse head and shoulders is a reversal for only bullish. That's a price that is dropping, market that is dropping. This happens more of the time for it. Then for a head and shoulder reversal is for for bullish. Sorry, that's for bearish. Now for bullish, market dropping, and then for bearish. Now, bullish is a market that is dropping, and then it wants to reverse to the upward momentum. Okay, that's bullish only. It simply means it's reversing to a bullish trend. That is, it's reversing to an uptrend. For bearish, it's already going up, and then it's reversing for a downtrend. Look at it's just the opposite for the bearish and the bullish. So the bullish, I explained and I draw the format for this bullish. A trend dropping, a records a high, a low, and they drop, and it retexts a previous zone. Retexts a previous zone it met before. It just forms. Whenever such a thing is forming, it is important that you look at it critically. It may not look this beautiful. It may not look this neat on the live chart. After I'll look at it, we'll look for it on the live chart and identify them one after the other. So it may not look this beautiful and this clear and this clearer on the live chart, but it will definitely show its patterns. You will definitely understand that this particular one is a reversal pattern. So for the bearish is just an opposite of the bullish. So an uptrend, of course, we know an uptrend is a trend that is going up. So from here, this trend was going up, down, of course, a low, that's a higher high, higher low, higher high, which we agree, and then higher low. And for a downtrend, remember our rules for uptrend. Remember that when I was stating a rules for trend, I mentioned that any rule broken from any trend leads to chaos. And once chaos happens, it leads to the almost suspension of that trend to an establishment of another new trend. Sometimes could just be a consolidation. Okay, so when a rule is broken, I repeat again, it leads to chaos in the market. And that chaos would eventually lead to a reversal or a suspension of the current or existing trend. It could be to a consolidation trend or a direct reversal to a different trend. So this market was supposed to drop, that is, go up, drop, go up, drop a bit, continue, drop a bit, continue, just like in this form that will have for an uptrend, we know a list of higher highs, higher lows, higher highs, higher lows, higher highs. That's for the rule. It doesn't change. So if something has happened there, and then we now are having something that looks like this, higher highs, all right, higher lows, higher highs, higher lows, then there is a problem. There is a problem. It shouldn't, the current low should not be lower or low along the same height of the previous low. If it happens, then there is a pending danger. It could still break it. So once that happens, it is going to establish another view. And this is what mostly we'll be having. It will, once it drops there, it's going to go back and retest it. Some of the times you can do this and douche all it goes. That is what it does most of the times. That is just very good. This major concern is breaking the down level, the base level of where the trend began, or where the trend has recorded a strong base. There are areas in the market that price has recorded a very strong and dominant base. Most of the times, what a reverser is interested in is breaking the stronghold of a trend. And once a stronghold of any trend is broken, it is automatically a reversal. Because if let's say I have, let me say I'm a soldier. Okay, so, and we have a military base, which is of course the stronghold of any should I call any military organization or any country that has such kind of organizations. Now, if you want to break through this country, or let me say, for instance, you want to launch a missile to a country, and a country that has interceptors, of course, most country has their different interceptors in form of domes and all of those. So you want to break this country, you want to launch a missile. It will be very smart of you to first of all take hold of the interceptor machines. That is, go to the military base and compromise whatever that will intercept whatever you're launching. So this is exactly what happens. This is similar to what happens there. This is the base of this trend. This is the base of this, and this is where this trend has recorded its stronghold. So if anything breaks this base, all of this trend is gone. It is automatically a reversed trend. It has to obey whatever rule the order is given. So this one now could come here. Okay, since it broke it, let's say it broke it at this point, it could still come here, and push up down to the moon, because it is in control now. It is in control now. So that's for this particular. But one thing you want to identify is the head, the shoulders, the head, the shoulders, the head, the shoulders. The shoulder should be at the same length, at the same height. It could not be this perfect, but it should have a resemblance of this on your chart. We'll look at for them on the charts. Let's continue from. So we've mentioned two dangerous reversal patterns that could affect a trend's direction. One I mentioned is inverse head and shoulders, and this inverse head and shoulders happens only for a bullish trend. That is, it reverses a bearish to a bullish. Okay. Now, what is inverse? Inverse is not a two. It is just the opposite. So if we have a head and shoulder, the inverse of head and shoulder is head facing down or head facing up and shoulder facing down. Okay, so like when you're turned upside down, when a human being is turned upside down, the head now is facing it down. Okay, that's just what the word inverse head and shoulder is, just the opposite of what we have. So we have another one we call double bottom. Double bottom is another powerful reversal pattern in the market that can switch the direction of a trend automatically. It doesn't need to build on that. It just switches it automatically. It forms. We have, remember that in a trend we have up and down. So each time we talk about a reversal patterns, there are peculiar reversal patterns for each trend. If it is on a downtrend, there's a peculiar reversal pattern for it. If it's on a downtrend, there's a particular reversal pattern for it as well. So for a downtrend, we have what we call double bottom reversal, bullish only. Now, what does this mean? Bullish only, that means the trend is on the bearish move, on the bearish momentum, that is on a downtrend. And then it wants to reverse it from down to up. What happens? What do we expect? What kind of pattern do we expect? Look at what we expect on a double bottom. We expect something like this. Let's say we have a zone here, and then we have something like this, and this is a downtrend. It dropping, tush, all right? It went up. Okay, it came back. Okay, went up again. This is just what we're expecting. Double bottom, 1, 2, double bottom, 1 and 2. Once this thing happens, if it is going to come down again, it's just going to come down a few more and tush up to the moon. It goes. That if it's going to come down again after recording something like this, probably something like this is going to happen like this. 1 goes up, comes back, goes up, and drops a bit, So areas around here, and that is it. It's gone. It's gone. That is just what happens most of the times to these charts. But also we can also have triple bottom. Yeah, we can also have triple bottom where it records 1, 2, 3, 1, 2 before it reverses. All right. We can also have triple bottom. All right. So back to our picture, our image. So this is exactly what happens here. It dropped up, recorded a first bottom, up, and then second bottom. It went up. The next strike is just down, and tish, up it goes. So what you want to identify from here, what you want to look at for is areas around. Remember, for this pattern to be valid for a reversal, the trend must be on the downtrend. It must be recording a bullish, a bearish drop. Okay, for this to even, this reversal only works for the downtrend. Only, it cannot be for the up. So you cannot see such a pattern and feel like, okay, it's going to reverse and reverse down again. No, it only contradicts the trend. So once it has recorded a 1 and second bottom, it automatically flips it. Now for the uptrend, we have what we call double top. Okay, so for the up, remember we'll have double the bottom. For the down, we'll have double top. So a trend that is going up, of course, records a higher highs and a higher lows. Recorded 1, drops, goes back. 2. The next one it might do is here, and up, down it goes to a stronger zone and retests it. And that is it for it. That is how that works. So it's called a double top. It's called a double top. Now, the reason because is a trend. Remember that the trend is coming from below to above. Therefore, coming its target, its goal or its direction is on the upward movement, on the upward area. So if there is going to be any indication, it should indicate it above the chart. So for a downtrend, you're expecting to identify a double bottom. For the uptrend, you're expected to identify a double top. So similar thing that happens on the downtrend for the bullish only happens also for the bearish only, but it does it in an inverse way. That is, if it is happening down for the double bottom, for the up, it's going to be happening as a double top. Let me explain this again. What this is a trend that is going up, then a strict reversal hits it. Now, in all of these things you are getting, it is just back to our rule that states any breach in road can automatically affect a trend directly or indirectly. So here there is an uptrend, and it should record for us a higher highs, a higher lows, a higher highs, a higher lows. But then we are having something that looks more like a higher highs, a higher low, a higher highs. This is not a higher low. This is not a higher low. This is almost a higher equivalent low to the previous low. All right. So once that happens, it has recorded a double top. And the next thing is going to break the stronghold of that trend. So I've mentioned for you guys inverse head and shoulders. That is for the bearish, which is of course going to turn into a bullish when it's done with dealing with it. And I mentioned that here you want to identify a head and a shoulder. A head and a shoulder. For the head and shoulder in reverse up is just an inverse of the head and shoulder. That's why you have a head standing and a shoulder. Here you have a head turned over, turned upside down for the bullish reversal. Bullish, that means the trend is dropping and it wants to reverse upward. And then here, bearish, that means the trend is appreciating or going upward and it wants to reverse. And I've talked about the double bottom and the double top. They are all reversal patterns. The ability of for you to identify them gives you head over some things. Okay, so we also have other reversal patterns, which I will talk about. Okay, after. Okay, let's take another one. We have the falling wedge. The falling wedge. This one is neutral for bullish only. Now, identifying this particular pattern, it's very easy. It's very easy because you are drawing a triangle line or a triangle shape to identify this. One thing you want to know is the trend is on the bearish, is dropping. The trend is on the bearish, that is dropping, and a trend that is dropping, you have here, lower low. So it started here, okay, and started dropping. Lower low, lower high, lower low, lower high, and then that break. Now, for you to identify the falling wedge, the previous, all the lows of each of those patterns are always on the same triangular axis or the same triangular line. You have to use a line to understand this. They are always on the same triangular line. That is, if you put a triangle, if you put a line, it gives you no one breaks below or above it. They are at the same. And then the upshoot, it's still, how do I explain this to you guys? Look at this shape, just look at this shape. This shape is, this is a falling wedge, and it's more like a triangle. So if you want to if you want to identify this particular pattern, and you're looking at the trend dropping, it is very easy because you can just use a triangle. Just mark the area. Is the first drop along the line, and is the second drop along the line. If it is so, then it's a high probability that this is going to reverse. It's going to reverse as an uptrend. Okay, we have some seconds to end up this section. So after the first short break, we'll continue on identifying these trends. We'll explain them over again, and then we'll go to the chart and look for all of these and try to identify them. So I will see you guys in 10 minutes.